Also are anticipating an announcement of the sugar subsidy as well coming in from the UP government. Starting with the crude oil prices, and remember they have hit a fresh 11-year lows as concerns over growing supply and rising stock levels outweighs tensions between the key Middle East producers. A rift between Saudi Arabia and Iran over the Saudi execution of a Shia cleric failed to boost prices as it appeared to put an end to speculation that OPEC members could agree or rather not agree on production cuts to lift prices. The market is worried about the inventory data that will be released over the next 2 days from US, and that perhaps indicates a rise in the crude inventories. VIKAS HALAN is Vice President Corporate Finance at Moody's Investor Service, and he joins us on the show. VIKAS, hi, good to have you. It's been some day when it comes to the energy sector. What's your sense on where the crude oil prices are now headed for 2016?
So our view for US crude oil prices is about $40, to average $40 in 2016. For Brent, we are still expecting $3 higher than that, so about $43. And then going forward, we still expecting $5 improvement every year after that, both in Brent and US crude oil prices.
Because also the OPEC members are at a loggerhead, especially Saudi Arabia and Iran, and that currently means that there is not going to be any consensus on output. Would you agree with that?
It seems the way. I don't think they are going to be cutting output at any point in time, especially with Iran joining, and Saudi Arabia has already expressed their intention to increase market share further, and with the increasing tensions between Saudi Arabia and Iran, there seems to be a development of competition within them, and there is news that Saudi Arabia has already reduced prices of crude for European counterparts just to take over, or does not allow Iran to take that part of market share. So it seems that things are going to intensify rather than they're going to get moderated.
Because also, how much crude are you expecting the Iran to push in the world markets this year, and what's the kind of impact? Do you think markets have factored that in already?
Well, estimates vary, between 500,000 to about 1 million barrels a year. But, with the oil prices constantly in flux, and with Saudi Arabia trying to, undermine any efforts that Iran is making, things might get very difficult for Iran to increase the exports substantially. And if they indeed do that, then I think Saudi Arabian attitude towards their market share would actually have a much bigger impact on the crude prices, which again will play into how much Iran can export. So I wouldn't expect it to be much higher than 500,000, maybe 700,000 barrels per day.
Because would you say that the lower prices in crude are already weighing on the budgets of many producers' countries? As prices fall more, do you see defaults coming in? Is that a concern now?
Yeah, the lower prices has been weighing on the budgets, but if you look at the larger, countries like Saudi Arabia, they can still withstand this for some time. But some of the smaller ones, some of the countries in Latin America like Brazil, Venezuela, Argentina, those are countries where things might get a little more rough. And although we don't really expect a default imminently, but there is a large debt maturity coming up, particularly in Brazil, and it'll be interesting to see how they refinance that for Petrobras.
Also important to watch out for would be the demand growth expectations from consumers like China, India and the US. What's your reading and number onto that one?
Overall, globally, I think the demand growth expectation is about 1.2 million barrels per day in 2016. Most of that will actually come from China and India and partly US. Other economies are not doing that well. We don't expect, things to improve on other fronts. So effectively, most of that 1.2 million barrels will come from these countries.
And have you noticed, or do you expect a big dent on the capital spending in the energy sector with prices so low, down nearly 60% from the kind of highs that we were in the previous year? Has that worked its way in?
Absolutely. The capital spending will decline at least by 20% across the board for all the upstream companies, including integrated national oil companies. Everybody is going to cut capex spending. However, we might see an increase in M&A activity as oil prices stay low. Some of the companies who are distressed will have to sell assets, and some of the companies who are relatively better positioned will probably buy them. So the M&A activity would increase in the oil and gas, although capital expenditure will decline at least by 20%.
Vikas, so when do you see stability and gains coming in for the crude oil and the products like heating oil, gasoline, etc.?
It's hard to say. Stability is ever-changing word. I don't think we can say stable at any point in time, given where the crude prices are. It will take a while for market to stabilize, because everything will, feed off crude oil prices eventually. And if they don't stabilize, I don't think any of the product prices will eventually stabilize.
Vikas, final question and we'll let you go then. What's your sense from the other factors like warm winters in the northern hemisphere, the strength in US dollar? I mean, these are factors as well which have been pushing prices lower.
Those are, I think the warm winters are clearly seasonal factors, and that has impact on the product prices and refining margins for refiners, not as much on the crude. So far as US dollar strengthening is concerned, yes, it has an impact, but it also helps the oil producers in the non-US markets, because then if US dollar is strengthening there, despite a price decline in oil, the depreciating US dollar compensates partly, and you get some respite.
All right, Vikas, we'll let you go at that. So that's the view really coming in from Moody's. The prices may see some consolidation. $40 on average is what they're expecting for 2016, and $5 per year is what the kind of jump that they're expecting. Of course, there are too many factors at play right now. Middle East amongst the major ones to watch out for. Let's also